Okay, we're not.
All right, ladies and gentlemen, we are going to be in 14.6. We are going to be going through and finishing our worksheet. Okay. Our columns on our worksheet that we have is we have a trial balance, which is to prove that our debits and credits equal. We have our adjustments where we go through and adjust. We have done every adjustment except one. The last one we can't do until we actually know what our net income is. Okay. The last adjustment that we have to do is our federal income tax. This is going to be what will take us time. This is the last section for this chapter. So this is my last time that I'm teaching to you seniors. Very sad. Bring you some Kleenex.
Wait, it's not the last time you did
Accounting. What we have to do is we have to go through and actually calculate what our net income is prior to our federal income tax. Then we calculate our income tax, and then we have to do another adjustment. Because the federal government is going to base our income off of, or base our tax off of how much money the business makes. So we have to do it in a couple different steps. So you will notice when you look at your adjustment column that you have a spot to fill in for federal income tax and income tax payable and federal income tax expense. You will notice, though, if you scroll all the way down on your worksheet, there is an amount in federal income tax expense, $40,000. Do you see that? That is what the corporation estimated what they thought their federal income tax would be. Because they have to go through and pay periodically. They can't wait until one point in the year to pay all their federal income tax. So they pay periodically. At the end of the fiscal period, they go through and actually determine what their net income is and then calculate what their real income tax expense would be. And then pay the rest in. They will always underestimate a little bit instead of having to wait for the government to give back a refund. What we have to do is we actually have to carry over all of our accounts over to our income statement column except federal income tax, because we need to calculate our net income prior to taxes. Okay, so we have to calculate our net income without taxes, then calculate our taxes, and then finish our worksheet. So it gets a little bit confusing. You need to read 14.6. Read it, read it, read it. This is going to be the most confusing part of the whole chapter. Okay, so what we're going to do right now is we are going to extend all amount columns except federal income tax expense to the appropriate income statement or balance sheet columns. And it says do not total the columns. Okay? What we want to do. Now, they have this shaded so you don't have to think, but I want you to remember, how do you know if it goes on the balance sheet or income statement? What is the purpose of an income statement? To find our income. And now let me give you your hugest hint, because you are going to have sheets where you don't know if it goes on the income statement or balance sheet. Income summary down goes on your income statement. Your balance sheet, the purpose of a balance sheet is to prove your accounting equation balances. So you have to have your assets, liabilities, and stockholders' equity. So you're going to have all of those accounts. But remember, income summary down goes on there. So we need to go through and transfer over cash. Goes on our balance sheet of $18,485. Watch your typos. Petty cash, $300. Now, what do we have to do here for allowance for uncollectible accounts? We have two credits, so you have to add them. So you have to add 524. $524.84 plus 2,120, and that would give you $2,644.84. Anyone else agree with my math? Now, merchandise inventory, am I adding or subtracting? I have to put it in the credit column. Good eye. You were on fire today.
I'm just on the ball.
How's that? Better? Okay. Now, for merchandise inventory, I need to take my 248 to 752 and 25 cents and subtract my adjustment of 13,848.05
And that is going to give me a debit or credit balance. Because your debit is bigger, and I have a new debit balance of $234,904.20. Agreeing?
Yeah.
Supplies office, adding or subtracting?
Plus.
Subtracting.
Subtracting, because your adjustment column is a credit. So you need to take $5,485.25, subtract from it $4,828.10, and you'll get a debit balance of $657.15.
Yep.
Do the same thing for supplies store. You'll take $4,578.36, subtract from it $3,945.25, get a debit balance of $633.11. Thank you, Katrina. Same thing for prepaid insurance. Take $6,200, subtract $5,400, get $800 as a debit.
Yep.
Office equipment, you just transfer your number over, or $35,487.25. Now, accumulated depreciation office equipment is a contra account to our office equipment, so therefore I'm going to need to have a credit balance, and I need to add my two credits together because I have a $12,485.25 plus $6,120. I get $18,605.25. Same thing for accumulated depreciation store equipment, $18,482.28. Nope, wrong number. $15,483.25 plus $5,060 will give me a credit balance of $20,543.25. Thank you, Katrina. Accounts payable has a credit balance of $18,482.28. Now, I don't have anything yet for federal income tax payable, so I need to go through and do my credit balances for my liabilities. Make sure dividends has a debit balance. Okay, I went through and did my balance sheet. How are you on your balance sheet? Still going? Alright, we will do the same thing on our income statement. Please watch. What is going to get a little confusing when we look at income summary, when you scroll down, I'm going to see $13,848.05, and a lot of people are going to think this is going to be a credit, but it is actually a debit. Why?
Because it's an adjustment.
It's in the adjustment column, so I got to do $13,848.05, and then I have to go through and put in your sales, which will be a credit. Same thing for sales, returns, and allowances. Purchases has a debit balance. Someone's phone is vibrating.
Yeah, that was mine, my bad.
Now, accumulated depreciation, office equipment, is that a debit or a credit? It is a debit. Watch that you don't think it's a credit and put it in the credit column. That happens a lot.
Yeah.
Now, I am not putting in the $40,000 for federal income tax. I'm leaving that blank. Okay? What you have to do is you have to add up your income statement debit column. Do not put it right here. What I want you to do is I want you to scroll down and I want you to put it here. Okay? Now, add it up more than once. This is going to be what's going to take you some time. Okay, go through, add up your income statement debit column, put the total down here, add up your income statement credit column, put it down there. Add up the column twice to see if you get the same number twice. This is going to be what takes you time. There's no faster way, you just got to add it up. We are going through and adding up our income statement columns right now to find out what our income tax is. So we need to not include $40,000 because $40,000 for that federal income tax expense is an expense that the business has already documented and paid based on what they thought would be their net income for the year. Okay, so we have to add up everything except that $40,000, and you should have gotten the number for your income statement credit column of $859,940.34. Your income statement debit column should have been $714,284.40. So then when you subtract the two, what is our net income?
145,655.
Yes. Now, what we have is we have a tiered structure for calculating our net income. At the first $50,000, we are going to pay 15%. The next $25,000, we are going to pay 25%. The next $25,000 after that is going to be 34%. And anything above that, we are going to pay at 39%. So what are you noticing? The higher your net income, the more percent you are going to pay on that. Okay, so this is what gets a little bit confusing. What the federal government is doing and how we're going to calculate it here for accounting class is the first $50,000 we are going to pay a 15% income tax. So right here we have to put in 15%. What I need to do right now is I need to multiply 50,000 times 15%, or in your calculator 0.15. Okay, when you do that, what do you get? 7,500. I am filling this out right at where you need to be on your worksheet, so if you're not caught up to me, make sure you get here. Now, the next 25,000, this will be given to you, but you need to know this, okay? The next 25,000 is going to be paid at 25%. So what do I need to multiply? 25,000 times 25%. And when I do that, I'm going to get 6,250. How much is my net income? 145,000. Would you agree? And so far, when I take 50,000 plus 25, I am up to a net income of just 75,000. So I need to keep going, right? But if a business only had a net income of 70,000, right here, I wouldn't multiply 25 by that. I would multiply whatever it takes to get to that net income. Does that make sense? So it totally depends on what your net income is, which you calculated right above here. But we know that our net income for this business is over 100,000. So I'm going to take 50 plus 25 plus 25, which is going to get me to my 100,000. So the next 25,000 is going to be taxed at 34%. That is just what the federal government said. So it's preset there. They give that to you in the book when you read section 13.6, or excuse me, 14.6. You're going to want to read 14.6. Can't say that enough. You're going to have a lot of questions on that section. So I need to take 34% times 25,000, which will give me 8,500. Now, what I need to do here is I need to calculate the rest of my net income. So I've put my net income here of $145,655.94. From that, I'm going to subtract 100,000. Why 100,000? Because that's what these numbers are added up. 50,000 plus 25 plus 25 that gives me 100,000. So I've already taxed the first 100,000. So I'm subtracting that out. So that would give me 45,655.94. I hope you didn't need a calculator for that. That $45,655.94 is going to be taxed at 39%. Has anyone got that number? 39% of 45,000?
Oh. 805.
All right, $17,805.82. Now, what we have to do is we are going to add up all of these numbers, 7,500, 600, 6,250, 8,550, plus 17,000. That is this company's actual tax that they have to pay to the government. So the tax that they owe based on their net income is $40,055.82. Would you agree? What did they estimate their tax is going to be?
40,000.
40,000. Did they estimate pretty close?
Pretty.
How did you get that 40,000 was what you estimated it was going to be?
Random guess.
Random guess. Ms. Gressel said it before. The amount in the federal income tax. So now this is actually going to be our last adjustment. We did all of this to calculate our last adjustment on the worksheet. Okay? So we know that our actual federal income tax expense needs to be $40,055.82. What is our adjustment going to be?
55.80.
Debit or credit?
Credit.
And
Summer.
needs to be a debit. Why? We have to get it to go up. We need our federal income tax expense to be $40,055.82. So I need to debit federal income tax expense $55.82. Now, can't have a debit without a credit. Where does it go?
Up here, right there.
Bing, bing, bing. Scroll up, scroll up, scroll up, scroll up. And we're going to go to line 14, federal income tax payable. Debit or credit?
Credit.
Credit. Now, don't forget, do this. Put in $50, oh, $55.82, right? Where else do I need to put that $55.82? On the balance sheet as a credit. Josh, you're offering your debits and credits today. Now, I can really total improve my worksheet. I did all of that work to calculate my last adjustment. Okay? Now, I need to finish my worksheet from left to right. Trial balance is already proved. What do I need to add up and prove now? Adjustment column. So, calculator out, do some scrolling, add up your adjustment column. Adjustment column debits and credits should equal each other. Income statement and balance sheet should not equal each other. We have to calculate the net income yet. Okay, so go through, just do some math. Don't worry about them not equaling yet. All right, ladies and gentlemen, I magically have numbers. Your income statement debit column total should be $754,340.22.
That's not what
Credit should get $859,940.34. Balance sheet debit should be $368,601.46, and balance sheet credit should be $263, $1.34. Now, these should not equal. Why? We have to find our net income. We already calculated the net income once, but that net income that we calculated before was for what?
federal income.
Was to calculate our net income before taxes. But that's not truly what our net income is that we're going to report to our business people. So what we need to do now is we need to calculate our net income by subtracting our income statement columns. Okay? So you subtract these two numbers, and it is going to be a net income. How do I know it's going to be a net income? Balance sheet credit is bigger than balance sheet debit. The credit column is sales, the debit column is our expenses or our cost columns, and our credit is larger. So when we do that, we should get a net income of $105,000. $612. Now, how do we know that it works? I take this, what I put on the debit column, and put it over here as a credit. And now I need to add down. And when I add down 263.0134 plus 105.61, it equals 368.601.46. Does that make our life happy? Because now my balance sheet equals. My balance sheet will equal after my net income. My income statement columns will equal after my net income. But you have to make sure whatever column that you put, whatever number you put here in the income statement column needs to also be in the balance sheet. What do we have to put right here? Net income after federal income tax expense. I will change the assignment. Okay?
Oh, it says as deadline. What the?
What's the?
Hang on.
Jasmine Bird, Kevin Van Langenberg, Cody Gillespie,
Hang on, just wait, don't exit out.
Garza, Jacob Gerhardt,
I said
Josh
before.
Hopkins, Emily Schiffer, Nicole Radar, Martha Beard, Drew
Hang
Meyer,
on.
Braden Walensky,